You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is investment and crowdfunding expert Adam Gower. Now, Adam is the founder of Gower Crowd, a published author, and the host of the Real Estate Crowdfunding Show. He has more than 30 years of real estate development and finance experience and has held senior management positions at some of the largest publicly and private companies and institutions in the world. Additionally, Adam is a highly sought out after expert in crowdfunding investment and finance, providing advisory services to sponsors raising capital and access to exclusive opportunities to a private syndicate of investors. He's a founder of the National Real Estate Forum, where he hosts the only internationally syndicated podcast series focused on the crowdfund real estate industry. And in this interview with Adam, I'm going to cover a litany of topics, including the unique story of how Adam found his way into the investment world, the latest trends in the real estate equity crowdfunding space, how to set yourself apart as a real estate syndicator by honoring best practices, the important role an online presence makes when it comes to capital raising, and why you need to place a huge emphasis on ensuring your brand image is stellar, why you need to be creating consistent, high-quality content that educates your targeted investor base, and also Adam's outlook on how the real estate market will trend both rolling into the election as well as 12 to 18 months post-election, and then much, much more, guys. And so with that, I'm excited to get onto the show with Adam, but before we do, I just have a few quick housekeeping items to cover. First and foremost, guys, we just launched our brand new partnership program called Bring Kevin a Deal. And this is where I will pay you as much as $200,000 for any deal that is referred to me that I end up buying. Now, to learn more about this opportunity and to download my deal acquisition criteria guide, you can go over to bringkevinadeal.com. Again, that's bringkevinadeal.com. And this relates to both mobile home communities, which is what our core investment vehicle is, and also parking lots, which is a new asset class that we've moved into. And so, again, I will pay you upwards of $200,000 for any deal that is referred to me that I end up buying, both in the mobile home park sector as well as the parking lot sector. And you can go to the website, bringkevinadeal.com, submit any potential deal you have that you'd like to discuss, as well as download my deal acquisition criteria guide. Okay? Moving on here, my team and I just wrapped up a brand new ebook that we're offering for free about the merits of investing in parking lots. Again, that's one of the asset classes that we're moving into. And this is one of the most misunderstood and undervalued niches that exist today in the commercial real estate world. And that's just a few of the reasons why our team is getting really excited about moving into this niche. Anyway, the book is called Parking Lot Profits, and you can download your free copy by going to parkinglotprofits.com or by texting the word parking lot, all one word, no spaces, to 31996. Again, text the word parking lot to 31996 and grab your free copy. And guys, just a few more things here. If you love what we're doing here at the Real Estate Investing for Cash Flow podcast, please take a moment if you haven't done so. Go over to iTunes, leave a rating and review. It really helps us attract awesome guests such as Adam to the show. And lastly, before we get on to it, I want to remind you of the free 30-minute phone call I offer each and every week. I've been doing this for many years now, where you can jump on the phone with me and talk about anything and everything your heart desires about real estate investing. Whether you're brand new or a seasoned pro, simply go to kevinbupp.com to get signed up for this free call. I offer 3 time slots every Friday. I do believe I'm booked out a few months in advance. However, get your name up there, and I look forward to speaking with you here in the near future. And now, guys, without further ado, let's get on to the part of the show that you've been waiting for, which is our interview with Dr. Adam Gower. So here we go. Alrighty, guys, it's my honor to introduce my guest for today's show, 30-year real estate development and finance veteran and the highly sought out expert in the crowdfunding arena, Dr. Adam Gower. Adam, how you doing today?
Very well. Thank you. Thanks so much for having me on, Kevin.
Yeah, thanks for joining me. And as I'd mentioned before we start recording here, I'm a huge fan of your podcast as well. So Adam also has a phenomenal podcast on, in fact, I think it's still the only podcast that is directly related to crowdfunding, real estate crowdfunding. And you've got a lot of other topics you cover on there, but you've had phenomenal guests. You've got hundreds of episodes out there. So guys, definitely go check that out as well. You'll find probably thousands of hours worth of great information, both on the podcast as well as your website. You got a lot of resources there as well. But Adam, for those folks that that aren't familiar with you, that maybe haven't listened to your podcast, don't know your background, maybe just take a few minutes and tell us a little bit more about yourself. Again, you've been in the business quite some time. I'd love to hear about kind of how you got started and introduced to real estate, and ultimately how you found yourself into the crowdfunding world.
Sure. Hey, thanks for asking, Kevin. It's nice to be here. And gosh, how did I get introduced to real estate? It goes back into the dim and distant past. I have to tell you that my family basically was a real estate development family in England, but my personal introduction was actually pulling wires for an electrician. I used to offer my services I used to tell people I'll do anything for $5 an hour, basically when I started. And I was hired by an electrician to pull wires in basements and crawl spaces and places that you wouldn't necessarily want to find yourself. But that really is how I started. And then that very quickly evolved into raising money. So I went to work for a multi-family sponsor, and they needed somebody to help them raise capital. Actually, this was in the 80s from Japanese investors. So that was really my big step up into capital formation and kind of more institutional level real estate.
How did that transition take place? And so that's a fairly big leap.
Yeah, actually, I enjoyed working on job sites, and I enjoyed the camaraderie, right, basically, that you have with other subs on a job site. But it was hard work and dirty work. And actually, this was 1987. It's amazing that I can even remember that far back. But I actually was interested in venture capital. And so I had, it's a long time ago. I actually rented a Brother typewriter. You don't look old enough to remember these days.
I had a typewriting class, I think, in 6th or 7th grade. But yeah, I think that was the end of it. They got rid of them after that.
Well, this was an electronic typewriter, and it had a little an LCD screen and a memory. So I could type an entire letter, and it would actually keep it, and then I could hit play, and it would retype the whole thing. And I did that about 300 times, and I wrote to every venture capital firm in California and in Boston. This is really the long story, but you've asked.
No, this is great.
And eventually, this was to try and get a job in venture capital. And eventually I was picked up by a Japanese M&A firm in San Diego. And so I went to work for them. But a friend of mine was a real estate developer. And I used to have breakfast with him. And he would sit, and we were looking at all these M&A deals that Japanese investors were looking at. And I used to have breakfast with my friend, the real estate developer. And I just thought, wow, he's making money hand over fist. And so I introduced it to this little boutique M&A shop that I was working for. And so they shifted actually their entire focus to raising money for real estate. So I ended up actually raising around, in 1980s dollars, I actually ended up raising around 30 million. So that's a lot of money. I mean, in those days, that was a lot of money. It isn't so much these days, but.
Yeah, no, that's fantastic. I appreciate you giving that background. And obviously that was before 2012 when Obama passed the Jobs Act, right? Signed it into law. Yeah. And so back then it was, pre-existing relationships. And so the firm that you work for, I'm assuming they were all pre-existing relationships, and you weren't doing billboards, and the internet didn't really exist so much at that time, right? And so it was really, direct person, contact to contact as far as those offerings and that sales pitch went. And so that's very interesting and very different than what the world's like today. And so, I don't want to go into I'm going to make the assumption here that everyone that's listening, we've talked about crowdfunding for years now, and a lot of you are capital raisers yourself. And so I don't want to go into the basics here of, what the Jobs Act is, and, what, equity-based real estate crowdfunding is, and how it differs from, some of the rewards or donation-based crowdfunding out there like Kickstarter and things like that. Right. So I'm not going to go there. But what I would love to chat about, being that,
crowdfunding is still very new. I mean, we're less than a decade into, this really massive shift in how, folks raise money for deals. Prior to 2012, it was really a country club sport, I like to call it, right? It was if you weren't directly related to a high net worth network, an immediate network, then I wouldn't say it's out of reach, but it wasn't readily accessible to the average investor, right? And maybe I'm wrong there, but that's kind of how I feel. In any event, the Jobs Act shifted that a great deal, and now that platform is readily available to just about any real estate investor out there that's looking to raise capital for their deals. And so, again, the world has shifted I feel in a very great way, and has opened up a lot of opportunity to folks that opportunity didn't exist before. And so what I'd love to chat about here real quick is, what are some of the major trends that are either happening right now that we might not be seeing, or that are coming down the pike as it relates to real estate crowdfunding? Or is there anything to speak of there? I mean, whether it be technology, regulatory changes, anything that is relevant and of interest to listeners?
Kevin, you make some interesting points. You ask a very interesting question. So the first thing, and I've taken a couple of notes here, so hopefully you can't hear me typing out too much.
Was that the typewriter? Are you using that old?
That's like that, exactly. Single finger. So the first of all, the fundamental shift from when I was doing it in the 1980s was that it was in person, and now you can do it online. Now you can raise money online. But ultimately, what's interesting is that it really hasn't changed. And it's not changed in this way. During the 1980s, the process, or any time pre-Jobs Act, anytime one was raising money online, anytime one was raising money, you have to go through a whole narrative where a sponsor would describe their background, talk about their experience, talk about their track record, and then eventually move into a deal that is actually being pitched. Well, nothing actually has really changed. Online, you're doing the exact same thing. The only difference is that instead of doing it again and again and again, because you have to do it in person, you have to tell somebody in person, you can copy it, basically carbon copy it. Sounds ridiculous. You can digitize the pitch and put it out on the internet and allow people to consume it through a device, right? Like a telephone or a pad, right? Or a computer, etc. That they can consume that information in small bite-sized pieces instead of having to sit down with you for an hour at a time. Mm-hmm. But the story that you're telling actually hasn't changed. It's just the way that you tell that story. Now, we'll get into your question, which was what are the trends at the moment? And I will tell you exactly what those trends are. But before we do, I wanted to make this other point, right? You talked about it being out of reach to the average investor. Well, it was out of reach to the average investor because it was prohibited sponsors were prohibited by law from basically advertising, from talking about their deals to, as you said, anybody with whom they didn't have a pre-existing relationship. So this has been the fundamental shift. It's really this shift to advertising. And advertising doesn't necessarily mean spending money on Google ads or Facebook ads. Advertising means that you can have a website that says, come invest, with me, find out more about what I'm doing. And so the trend is the move from, I'm going to show you what that is. Let me see. I've got a few of them here. I don't know if you still use these. I almost never use these anymore. I got a few business cards here in front of me, these things that I was actually thinking of framing them. Here's one. I'm going to show you that. I don't know if you can see that.
No, I can see it.
It's actually it's an old Japanese one that I had worked for.
Well, it's funny because I just went to an appointment the other week, last week, and I never take business cards. I own them, but I never take them. And the seller of this property actually asked me for a business card, and I didn't have one. It felt very awkward because he really wanted one. And he did not have a phone to where I could simply share my contact information with him, right?
Yeah. Old school.
Old school.
You know, it's that's a crazy thing. You know, when I was first in the States, I remember this one fellow. And literally his father was a nuclear scientist, worked for the military. And he showed me one of his business cards. And on his business card, all it had on it was his name. He had nothing else on his business card. And I think, and this was, you know, this guy was a scientist in the 60s. And I think what he used to do is had his name, and whoever it was he met and was handing his business, he would tailor, he would put something on it, either a phone number or whatever it was, he would choose what he was going to hand out to them. Well, the trend is this, Kevin. This is how it's changed. And this is very important for anybody online. Now, you might have talked about crowdfunding a few times and the Jobs Act, etc. But this is the trend. Number one, it used to be, and apart from you on the occasion where a seller needs a business card, it used to be you had to have a business card. On paper, you don't need those now. Then it used to be that kind of evolved into having a website, right? Basically, nothing more than a landing page where you had, you know, the name of your company. It's kind of like a digital business card. Had your name, a picture, right? A few pictures and contact information. And that was how the business card really evolved. Now, if you're a sponsor, you have to go beyond that. You have to have not just a landing page that is nothing more than a name and address with a few bits of bio on it, but you have to have information, that whole narrative that is who you are has to be more than just a paragraph, right? It has to be content. So it's gone from being a static piece of paper to basically a static landing page to a constantly evolving information delivering digital platform. You have to have a digital presence or information, right? It's somewhere that people can go and basically establish a relationship with you. So that's the key shift. That is the powerful trend that's happening at the moment. And if you don't have it, I was talking to Brent Higelke, who is the CMO at CrowdStreet, actually. And he said, if you don't have a digital presence, not if you don't have a website, if you don't have a digital presence, you will cease to exist. Right? And that's a crazy thing to, what does that mean? I agree. Exactly, right?
Yeah, I mean, when both of my sons were born, they're only 3 and 6 now. But the first thing I did when we decided what their names were going to be, make sure that it was available, right, as a domain, and purchase their domain name. I mean, I think that is your resume moving forward. That is that's your brand identity. Whether you're going to have an online presence and be an influencer or not, like, I think that's going to be incredibly important when they become adults, right, or just when they're in high school or going off to college, what have you.
Wow, that is a fascinating idea. I'm going to send myself an email right now to do just that. I hadn't thought of that, actually. And if the domains aren't available, I'll change their names. It's okay.
There you go. That's the easy way. Or you might have to go spend a couple $100,000 to buy the domain from somebody.
That's right. Heaven forbid you named your kid Google, which is where I thought you were going.
I want to speak to, you having that online presence and that digital platform. And I think the biggest key component there, at least when we talk about raising capital, is making that process from beginning to end, from, individual that might have an interest of who you are, want to learn about you and your company, to reviewing your offering, to, completing the subscription agreement, what have you, and basically wiring the money or getting the wiring instructions, actually going A through Z through the entire process. Is the whole objective, I think, of having that platform. It's not just to have it, but ensure that platform is efficient. that it doesn't put up roadblocks and challenges for the individual that's trying to build a relationship and hand you money. Would you agree with that?
Yeah, basically your digital presence, your website is a tool for establishing a relationship with somebody automatically. It sounds a bit daft to say automatically, but it basically means remotely. So the whole what digital marketing is, what content marketing is, or your digital presence is that relationship journey. You're creating a relationship with prospects. And yes, you're quite right. It has to be efficient. And the way to make it efficient is to create small sound bites, basically. I mean, it's the way we consume, Kevin, it's the way we consume everything these days, right? You look at a head. In fact, nothing's really changed. I don't know, when you used to read a newspaper, I don't know anybody that actually has a newspaper these days, but you used to scan the page at headlines. You would decide what you wanted to drill down on as far as a headline was concerned, and then you might read the whole article. Well, nothing's really changed. You scan through a feed on social media. You look at headlines. You might get as much information as you need just from the headline, right? It might be interest rates at historical lows. All right, well, yeah, I might be interested in reading the detail of that, but right there, that's a lot of information. As a sponsor, you want to be providing value to your prospects in that same kind of soundbite way. And what will happen is that prospects will react to different kinds of sound bites that you put out there. And in the same way as you're reading headlines in a newspaper, drill down on that. So if they see something on LinkedIn, for example, they might click on that and end up on your website. That's part of the investor journey. That's how they come to get to know you, right? Kevin, you know this. You have people contact you who say, Kevin, I feel like I know you, right? Total strangers. I mean, how does that happen? That's because you have a digital presence, an excellent digital presence online, and people are able to establish a relationship with you without you ever having to meet or communicate. Well, without you ever having to meet them or speak to them in person, they're still able to create a relationship with you. And that's what sponsors have to do now in order to raise capital effectively.
Yeah, no, that's a great point. It kind of ties into something I want to chat about here. And so I think we're already into it. And that's, how does that new sponsor really, separate themselves or get noticed with all the different noise and just all the different offerings that are out there now that the crowdfunding, post Jobs Act, now this platform and this these means are available to everybody, to just about everybody. And so, there's not a point in time that you can't get on LinkedIn or Facebook or many other different social platforms and see offerings coming at you left and right. I mean, just they're everywhere, right? And so outside, I want to drill into the content, right? Becoming an influencer and just getting your name out there, right? Getting your brand out there and what it is who you are and what it is you do. What are some suggestions you might give for those that are just getting started, that want to get that foothold and they want to do it quickly?
That's a really good question. Again, you brought up a few things here. So first of all, having an online presence, you talk about noise and deal flow and all kinds of stuff online. Well, you're absolutely right. But few things. One, it is no longer, in my view, it's no longer optional whether or not you have an online presence. It is a minimum requirement. Because why? If you don't, that's the whole idea of you don't exist. If somebody runs a search and says, let's say you run a search, real estate cap rates, right? Or how do I invest in real estate? If you don't have an effective online presence, when that investor runs that search, you won't appear. From that investor's perspective, you don't exist. Somebody else will pop up in their Google search results, and that will be the person that they will go to find out more about real estate investing, and may well be the person they end up investing with. So you have to have something there. You have to be present. If somebody comes on your show, for example, and they and a listener, right, an investor wants to find out more about them, and then goes ahead and runs a search on that person, and nothing shows up, or a website that's nothing more than a landing page with a couple of pictures on it, then you have stifled that prospect's opportunity to learn more about you. Think about it this way. Here's a great way of thinking about it. So when you buy, I do this with the craziest, like a vacuum cleaner. We needed to buy a vacuum cleaner. So I go into hyper overdrive to study out what are the best vacuum cleaners, right? I go to the consumer reports, I go to reviews, I go to the website, I study up everything, for a couple $100 bloody thing. I'll spend half a day figuring out what it is. Well, imagine what's that like when you buy a car, or if you are going to write a $50,000 or $100,000 check. You also put yourself in the shoes of an investor. You want to be able to do deep due diligence, to understand exactly what it is. So as a sponsor, you have to make that as easy as possible for an investor to quench their thirst in knowledge about you. So the more you have out there about your background or your perspective of how to invest in real estate, the more you're going to facilitate that prospective investor's ability to learn about who you are and to establish that bond with you, right? The less you have there, the less chance they have, the more chance they are that they will invest with you. So there's a couple things to do. First of all, I would also say this. You do say that it is a lot of noise out there, but Kevin, I'm telling you, it is a blue ocean opportunity.
I agree.
Blue ocean. If you get anything even halfway decent up, you are going to be ahead of 99.9% of people. Anybody that's listening right now, think about what you've got up online, and even just slightly more than you have now will put you ahead of everybody else. And I'll tell you exactly how to do that. Right? The best way to do that is to preempt, to be seen as being a leader in the industry. One of the greatest skills you can have, it's the old school salesman thing, is to anticipate if you can say what your prospect is thinking, if you can project or predict what they're thinking, if you can articulate the problem that they have better than they can, you will win them over and they will see you as a leader. They will buy from you. The way to do that is to think about the FAQs that you get raising money, the most frequently asked questions. What do your investors, write them down. If you're not already doing this, get into the habit of writing down the good questions that your investors ask you again and again and again, and create content that answers those questions. Frame your content as that question. What is the IRR? Pick anything, right? What are returns? That's your subject line. And now what you're doing is anticipating what it is that your investors want to know. And by doing that, you are almost, it's like you're reading their mind, right? And that's how you appear as a leader in the field.
No, I love every bit of that. That's phenomenal. It's interesting that you actually bring up the FAQs. Is that we've got them on our website, but we actually just got done doing a couple day video shoot, actually doing a full 25 some odd videos of our FAQs. We had them spelled out, but like we actually went through and shot videos of that. So
that's exactly right. You nailed it there. Because then what you can do with those 25 videos is you can rotate those on Twitter,
Absolutely.
LinkedIn, Facebook, and YouTube. You get them up, they start rotating, and then something else happens. Then your prospects start to see you everywhere. They see you everywhere, addressing the concerns that they have about real estate and real estate investing. So immediately you become a leader in the field. You become a thought leader and somebody that they want to know more about. It's exactly the right way.
No, that's great, because a lot of folks, I don't have any content. I don't know what to share, right? And right there, we just nailed it. I mean, that's a very easy way to come up, of content of exactly what your potential investors are seeking. In addition to that, once you start the rotation of those videos, guess what's going to happen, Adam? People are going to comment. People are going to have additional questions in the comments about the video they just watched. And now you've got another slew of maybe, sub FAQs, right?
That's
more
an
videos to make.
Thought. Let me mention something about that, actually, because I do get this quite a lot from some of my private clients. When we start rotating content online, they do look at it and start wondering, why am I not getting a lot of likes? Right? Why are people not commenting? Well, let me say this. Look, and this is between just you and me and the 20,000 people listening right now, that real estate investing, we're not teenagers. This isn't chit chat. This isn't happy cat stuff, right? Or whatever people talk about on social media. It's not social. This is business. You're using social media to communicate some ideas, but don't expect activity in your feed based on your content. Mm-hmm. It's not how it works. With real estate investing, what happens is every single one of those videos, of course, will have a CTA, a call to action. And that call to action on social media will be click here to find out more. That will bring now a prospect. Again, think of the investor journey. It will bring them one step closer to you by bringing them to your website where they can consume more content. Mm-hmm. And so the way to determine whether or not people are consuming your content actually is not, I mean, it's a good idea. I'm not dissing your suggestion at all. Don't get me wrong, but not to be disillusioned by the lack of comments or likes or whatever, but instead to use Google Analytics, because Google Analytics will show you what kind of traffic you're getting from social media to your website, what pages are resonating with people, how many people are there, what are they doing after they land on one page. That's the way to actually track behavior. And if you do have content on social media, you will start to see slowly, but it will build a dramatic increase in the amount of traffic that you get to your website and to your stuff, basically.
Yeah, no, all great relevant points, Adam. Appreciate you sharing. And, kind of following up from that, you've dealt with and worked with, many successful clients across the country, top syndicators in the country. Of all those interactions, professional interactions that you've had with these many different, top performers, what are some of the, the key qualities or attributes that these best in industry have that others don't? I mean, what are some of the things that they do better than many others?
Gosh, you asked some really good questions. That's a really good question. And the answer to that is one word: authenticity. Mm-hmm. Authenticity. And authenticity is being true to yourself when you are syndicating a deal. It's very easy to want to be fearful, actually, of what people might think, right, about what you say. But one thing that's nice to remember about real estate, and Kevin, you know this, is that there is no central school for real estate development, right? There's no, you don't go to real estate development school. Everybody is a product of their own background and experience. And investors want to know what your perspective is, right? They don't want a cookie cutter, templated kind of description of what real estate is. They want to know what you understand it to be. How do you see the world? And so that's what's nice about going through your FAQs, or even if you see articles about cap rate, like if you run cap rates, you might find an article on my website, for example, come up. Well, that's great. But an investor in your shop, in your deals, wants to know what you think of cap rates and how you see them and how you believe they influence a deal. They want to understand who you are, and they want to be taught by you, what these views are. Now, it is intimidating to do that because, I'll tell you something. I suffered terribly from imposter syndrome. I really did. I used to think that whenever I'm eventually going to get caught out. Eventually, whoever I'm talking to is going to figure me out and realize I don't know anything. And then I started teaching. And I started teaching real estate investment and finance at universities after I got my PhD. Started teaching at university. And this is what I realized. And it's the exact same online. That when you're in a room with 50 students, on the back row, and I used to teach in these amphitheater type things, so I could see everybody. The back row, there's the group of students who are all on their laptops, watching YouTube, playing games. They don't care at all. They hate being there and they think you're an idiot, right? Then there's a band in the middle who are indifferent. They just want to pass. They just want to get through. It's tedious, but they're going to muscle through. And then, importantly, on the front row, there are the people who love every single word that you are saying. Mm-hmm. And so I would sit in this room or teach in this classroom dozens and dozens of hours. And I learned to teach only to those raving fans, right? The ones on the front row, because as a sponsor, those are the ones who will give you money. They are the ones who will sign the checks. Those are the people that you speak to. It doesn't matter about the rest. They may come in eventually, but if you are authentic, the ones to who you are, the ones on the front row will eat it all up. They will reject all other options, right? They'll only want to invest with you. Those are the people to speak to.
I love it. I love every bit of it. Now that's a great synopsis there. So thank you for sharing, Adam. And I want to be respectful of your time here. We've got about 10 minutes left, and I want to make sure that we switch gears real quick and that we cover a topic that it's about as relevant gets. And that's, the COVID-19 pandemic. And it's fine. I feel like I've talked about this in one form or another for every episode for the past 3 months. Right. And hopefully we'll find ourselves in a place a couple months from now where it will be somewhat of a thing of the past, right? It will be in history books, but hopefully we'll be past it and we won't have another major outbreak, what have you, and the world will get back on track. However, I think that's a little easier said than done. To give everyone some context here, we're actually recording this on Tuesday, June 23rd. And, as of this morning, the NASDAQ, I think it was trading over 10,000. Dow is over 26,000. I mean, look at the stock market, based on the rebound that it's had over the last couple of weeks or months. And, it looks like the economy's it's doing quite well, right? I mean, and, and then you look at the trends that are associated with collections, right? Even think of our company, middle of March, we're like, oh my gosh, what's going to, and this is before the stimulus package was passed. Gosh, what's going to happen in April? What's going to happen in May? Tenants aren't going to be able to pay. However, tenants paid. Hasn't been 100% of what it was, months prior. However, it's been really, really good. And the trends are pretty much the same across the board as multifamily is concerned. I think it's about 150 basis points on average below same time in comparison to year prior. And so, things are looking like they're still very, very healthy. We know that hospitality and retail are getting their butts kicked, no doubt about it. Hospitality probably much worse than retail. But I think that the last couple of months, at least I'm not an economist. I know you're not either. You've been studying this stuff way longer than I have, though, right? And so all I have is my opinion. And my opinion is that the last 3 months really haven't been much of a barometer at all, right? I mean, we've dumped trillions of dollars of stimulus into people's bank accounts. And in fact, a lot of our tenants in our communities are making more money on unemployment than what they were prior. And so I find it's challenging to look at the last 3 months as a real barometer of how things are going to play out in the real estate world. And I'm only speaking to real estate here. And I just love to get your perspective. And I know you don't have a crystal ball, and I won't hold you to anything in particular, but I would just, if you had to kind of play out what the next 12 to 18 months look like, assuming that we're not through maybe the worst of this pandemic. And again, even if we were, it's still, the damage has already kind of been done, right? And there's going to be some momentum carrying forward here for some time to come. What is your opinion? Where do you see the most pain happening in the real estate sector? What's some of the aftermath that might come that we might not be seeing today that ultimately will play out 12 to 18 months from now? What have it? Again, just generally speaking, I'd love to hear your thoughts.
Sure. And I'm more than happy to make a prediction with a date stamp on it, because if I get it right, I'll be seen as being a genius. And if I get it wrong, no one will listen.
That's anyway. They'll forget.
I'll just refer back to it only if it comes true. So actually, this is what I said right at the very, very beginning, and there probably are some podcasts out there where I am date stamped. And that is that by the end of the summer, I'm reasonably sure that we will see, as we move into the election cycle, we will see increasingly bullish, positive outlook and booming economy, irrespective of what's going on with the coronavirus. And it doesn't really matter who's in the White House. It's the economy's stupid, right? Wasn't that Reagan who said that? Right? And it's always the same. Politicians, whoever is in power will always want the economy to look good in the run-up to an election. And so I'm certain that it will continue to look better and better as we move closer to the election, right? So that's number one. Secondly, now it doesn't, right? That's number one. I don't know what's going on with coronavirus at all, whether or not that we're going to have a vaccine or whatever, but irrespective of that, I do think that that's what we're going to see. Secondly, what's happening with the stimulus? And you asked for the 12 to 18 month cycle, which is actually an interesting timeline that you ask about. So let's say that we do see a vaccine that puts coronavirus behind us, fully in the rear view mirror. And everybody starts going out and social distancing goes away and hotels are full with pent up demand and et cetera, and all this happens. Well, what else? What else is in the economy? Not just a very healthy economy going into the downturn, not just a cure for this, terrible disease, but importantly, a massive stimulus, financial stimulus on the economy beyond anything that we've ever seen before in history, right? Trillions of dollars of money has been pumped into the economy. That is all, plus a softening of lending requirements, although there's hesitation now, right? There's definitely a lot of regulatory relaxations to keep the economy going. What's going to happen is that everyone will start talking about how fabulously we succeeded. Banks, financiers will say, look how well we succeeded in stimulating the economy. And what's going to be left is value appreciation beyond anything we've seen before. And then the true cycle will come to an end. The true real estate cycle will come to an end because it always happens when liquidity gets out of control. Prices spiral out of control. Everyone pats themselves on the back from having survived and thrived and et cetera, and then wallop, we hit a wall. By the way, I'm not the only person that thinks that. So that's where I think we're going. I think by 18 months, we'll start seeing a roaring economy again. And then we're going to be headed to the true cyclical downturn.
So, I mean, that's a fairly large gap. I mean, that's a great deal of time. And so, as we roll up into the election stage, and obviously depending on who gets elected, what have you, that's gonna all the social unrest that's happening in this world right now. I mean, that's another complete other topic of discussion. You personally feel that there ultimately is going to be a great deal of confidence rolling into the election and thereafter up until about the 18-month mark as far as real estate's concerned. Is that the general premise that you're making?
I think so. I mean, look, there are going to be some pockets of opportunity.
How about the CMBS? How about the looming delinquencies or defaults in the CMBS world? And I think a lot of that's probably tied to hospitality and retail. Again, I haven't dug into those numbers, but there's a very substantial number of looming delinquencies in that world. What are your thoughts related to that?
Yeah, so those are still asset class based, though. So
yeah, that's true.
Multifamily and industrial, for example, are still doing, fairly strong. The ones that are really suffering are hospitality, and the issue, hospitality and retail. And the issue with CMBS is less the underlying collateral and more the structure and the way that CMBS is structured. That the only way to actually start on a workout is to go into default for somebody who has a debt in CMBS. The only way that they can actually find anybody to talk to about figuring out solutions to what's going on or to resolving the issues that they have is to actually go into default. So that's structural. And look, if the economy bounces back, a lot of that stuff will start to perform again. But it is asset-based, Kevin, and if you're in hospitality, it's going to be a long path. But multifamily and the asset classes you're in, are still fairly robust. I mean, mobile homes, for example, they must be doing pretty well, I would imagine.
Yeah, I mean, everyone needs affordable housing, right? Seriously, right? Yeah. Well, Adam, this has been absolutely fantastic. Just a phenomenal discussion, a lot of fun. And as I mentioned in the beginning, I'm a huge fan of your podcast and all the great information you put out there. If you guys want to see a great example of someone that's created a phenomenal brand image and puts out just high quality content in many different forms, you definitely have to check out Adam's website. And is the best place to find you is at the gowercrowd.com. Correct, Adam?
Yes, that's really the best place.
Okay. Good deal. Well, one last thing before we get rolling here, I'm gonna throw this at you. Now, I didn't prep you ahead of time that I was going to ask you this question, but this is what I call the golden nugget segment of the show, and this is where simply I'll ask you this: is there one last piece of advice or wisdom that you could leave with our listeners here today that might inspire and motivate them as they progress in their real estate investing career? And there's no right or wrong answer here.
Yes. Gosh, a word of wisdom. I don't know if I have any of those at all, but yeah, I think you mean is for a passive investor, or again for a sponsor, or just in general?
Just in general.
I think that I love real estate, and I think that irrespective of what the cycles are, it is a great place to invest and to look for opportunity. And the key thing is to be well informed. At the end of the day, you need to be well educated. You can't just invest, willy-nilly in something because it looks nice and just go with the sizzle. Whatever's in the pitch deck is just the sizzle. You want to make sure that there is substance beneath the surface. And so for an investor, that means researching the sponsor. And for a sponsor, that means providing the information that an investor needs about who you are, what your background is, where you come from, and making all that as easy as humanly possible for each other, right? Communicating online, just like you and I are. It's really extraordinary what we're doing when you think about it.
I agree. I agree with you.
A live recorded podcast. It's really extraordinary.
Absolutely. Well, again, Adam, thank you so much for joining. And guys, again, reminder, go learn more about Adam, what he's got going on. You can also listen to his podcast. He's got a ton of other resources on his website, which is gowercrowd.com. And I'll also make sure that's in the show notes. And Adam, that's all we have, my friend. I really appreciate you joining me here today.
My great pleasure. Thank you so much for having me, Kevin.
All righty. Guys, thank you for tuning into this week's show. And until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. You guys take care now.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.